This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Sunday, March 26, 2023, and this is the weekend Canslim growth stock update from the Greenville Eastside IBD group meetup group and the Stockyard meetup group. As always, for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to learn first and only then invest, and only invest at the right time also. So today we'll look at the impactor, the current market review. We got the bank and inflation contagion continuing. Talk about action plan thoughts over 3 time frames. We'll look at some charts and we'll talk about our next monthly meeting coming up Wednesday, April 12th, 2023, which is an educational opportunity. So let's look at the impactor. O'Neill teaches us 3 things to diagnose where we are. Also teaches us to diagnose, to interpret, not to predict. So we look at 3 things, and this is order of priority. Actions of leading stocks. These are strong Canslim stocks, both fundamentally and technically. There's about 4 of these, maybe a few more now. We'll look at a list I have of current leaders. And even if you miss these, you still get clues on the M from watching how they behave. Do they continue to make progress? Are they just flat on days when the market's getting hammered? Therefore, they're showing strength. What do the RS lines look like? Lots of things to study on those. And if those start breaking down, then we know that's an additional sign of a very, very difficult market. Actions of stocks owned, sparse, but still weighting in. So we'll look at the group teaching portfolio. And then market pulse, distribution day count, price and volume on the indexes, all of which I combine into the coloring book. So bottom line, to start out with the conclusion first, it has been and still is a tough market recently. I think the breakouts and the gaps in Canslim stocks since the January 6th follow through day have struggled. I now have a total of 49 true Canslim stocks from a fundamental perspective that had a proper breakout, came out of a base or a valid early entry, sloping trend line, something like that. And the vast majority of those have either stopped out or they're struggling to get traction. And we went through that whole list and glanced at those during our last monthly meeting. So 3 weeks ago, my cover slide, there were a lot of question marks. This was back right. I believe that was when the bank contagion was starting. Last weekend, I was back to a train wreck, or 2 weeks ago, sorry, I was back to a train wreck. And then last weekend, I just used Mr. Pickle in light of Powell and the Fed meeting that was coming up this past Wednesday. And so this past week, what happened? Well, we had the Fed meeting and we had Powell's press conference. And then Powell and Yellen sort of had simultaneous dueling press releases or press conferences, because while he's testifying there's going to be relief for the bank situation, she was backing off her prior statements and saying there was not going to be blanket unlimited FDIC insurance for depositors across the board, after she had previously indicated that there was going to be that, at least for some sort of limited time, like 2 years is what they were talking about. So she backs off of that while Powell is speaking. And that really kind of hit the market. So maybe instead of Mr. Pickle, I thought about it more like Mr. and Mrs. Potato Head. You know, just can't get on the same page here, guys. So let's take a look at the action now. We'll hop over to MarketSmith and the coloring book and everything, as well as the group teaching portfolio. So let's go to MarketSmith first. So here's the NASDAQ on a daily. This is the strongest index. It is above all 4 moving average lines. It did go up and hit resistance right at 12,000. Had that ugly outside reversal day. That was on the Fed / Yellen press conferences. So that was kind of ugly there. But this one still is looking okay. Definitely the strongest. You can see the RS line still headed up. This is the weekly, almost set up, in a little base here. And again, just running into resistance right at 12,000. So we certainly would like to see it push through that. In contrast, here's the S&P 500. So you can see it's back by the end of the week. Had that ugly outside reversal day, same downside reversal, same thing on Wednesday, and then is battling at the 21, is still under the 50-day, so it has not reconquered all four moving average lines, nor are the moving average lines stacked in the correct order. And it really just gets worse from here. So here's the NYSE under all four moving average lines, stuff stacked in the wrong order. The Dow, same thing, under all four moving average lines. Well, I'm sorry, it's above the 10-day. The Russell, small caps are absolutely the worst currently, due primarily to their exposure to the financial markets. So you can just see the RS lines plunging below all four moving average lines. The 10 and the 21 are plunging down, and the S&P 600 is going to look the same. In fact, these have undercut the lows from back here at the end of last year. So weakness there. If we look at the group teaching portfolio before the coloring book, so just under 30% invested, and part of that's long and part of it's short. Oh, I got my percentages wrong. I got to redo the math. Sorry about that. Down just under 1% for the year. Have some short positions as well as some long positions, including ON, which was entered on the gap breakout, and of course has done fantastically for anybody that's looked at that chart. And we have that in our list of leaders, so we will see that. And if we go to the coloring book, so this confirms what we were seeing overall and just being a tough market, just working from the left. So we only have 4 buying days and 13 selling days in the 25-day window that goes back to the orange dot. I just study that because that's the window that O'Neill focused on. Fed meetings are in dark gray, so you can see that there. The NASDAQ, we saw the chart. Here it's confirmed. It's the only MMTS index that has turned green. Distribution day count is currently 4. S&P 500 was second worst. We saw that, or second best. So have 6 distribution days there. It's yellow on the MMTS trend lines. The other 4 are red, have 7 distribution days on the Dow. The market school exposure model is at level 0. IBD is red, so market in correction. The window of opportunity, which again looks at the NASDAQ as part of its system, is actually green. So we have a little bit of green, and that's why there was a little bit of weighting in. And then these 2 columns are net highs and net lows on the NASDAQ and the New York Stock Exchange. Those are red also. So a lot of red, a lot of weakness, definitely not a full throttle environment, to say the least. So that's about everything there. So let's go back to our presentation. So we looked at that, talked about what was out there. We're still in March Madness. Month's not over yet. So my tournament bracket is actually the FDIC tournament. So this is still showing us the bankings. I need to update this a little bit. Credit Suisse, of course, got bought by UBS, and I think a 60% discount to what it was trading at. So it went from $2 a share to under $1 a share was the takeout price. First Republic's in trouble. We already know about Silvergate, Silicon Valley Bank, and Signature Bank. Deutsche Bank's name is coming up a lot. So we'll just keep watching. As I said last weekend, I think these bank failures are a big deal in my opinion. You had Silvergate, and then that Friday, Silicon Valley Bank was taken over that Friday afternoon. That was the first bank failure since 2008, so it'd been 15 years, and it was the second largest bank failure ever. And in ironies of ironies, it was due in part to investing in long-term mortgage-backed securities, which is what led to banks failing in 2008 during the financial crisis. Then we had Signature Bank of New York on a Sunday. This was 48 hours, not houses. Got a little typo there. Credit Suisse, we already talked about a 60% discount off its $2 price. And that was after they got that $54 billion loan from the Swiss government. And the Swiss government, I think there's some guarantees in backing that buyout also. First Republic got 30 billion in support and deposit transfers from other banks, so it wasn't an outright 30 billion, but it still is having a very difficult time. Both those big events, brief after market close, pop, and then the bleeding pretty much resumed among the banks. So this is just one of those areas where I think there's a lot of uncertainty. Uncertainty drives volatility in our markets. The market hates it and will struggle with it until one is clarified. You can sort of see where things are heading, and then it can be priced in by the market, and we get more stability, less volatility. So I think the banks are a very big issue with multiple ripple implications. And it's just those things that aren't resolved or priced in a couple of weeks. In fact, if you look at the Fed balance sheet chart on that website, the Fred site, it shows massive increases the last 2 weeks. So after trying to reduce the balance sheet last June, they undid the vast majority of that in just 2 weeks with money that had to be pumped back into the system with the bank issues where they're supporting them, making additional money available. So the Fed met this past week. It was a critical one, as we talked about heading into it. Got a 1/4 point rate hike, which was, I think most of the projections were there. But most importantly, it looks like there's still more to come. And Powell was very clear that there were not going to be any rate cuts this year. But the projections by many is there are going to be rate cuts this year. So we'll just see what happens. The 2% inflation target has not been adjusted. I kind of thought at some point maybe the Fed lets that slide to 3% or something, but they haven't pivoted to anything like that. So the current market signal, after discussing all that and looking at it and thinking about it, so my slide for this week is our friend Mr. Mario. Still a dangerous environment out there. Still banana pills ahead. In fact, let's see if this one will play. Yeah, for growth stock investors, we're just sort of, seems like difficult to get traction, to say the least. So we're just going in those little circles there. So one thing that is obvious, or because other people have pointed it out, I think it is correct, that the growth heavyweights are doing the heavy lifting now. So look at these big growth stocks since the first of the year, and these 7 are 47% of the queue. So here's a chart. So just from the first of the year, looking at Tesla, Facebook, Nvidia, Microsoft, Amazon, Apple, and Alphabet. And you got 3 of those are up over 50% just since the first of the year. And it kind of shocks me when I made this little chart. A report I read each weekend was pointing this out about the strength in these 7 since the first of the year and the heavy weighting that they have in the triple Qs. Those are some solid numbers, obviously over 50%. And then the other ones are strong in there also. But when you look at the NASDAQ and the Qs, the strength is not like this at all. So, I mean, the Qs is stronger because of these, and it being a weighted index. Because if you look at the triple QE, which is equal of weight, there's a difference between those two. And you can put that in a little comparison chart. I probably should have put them in there so we can look at it, but you can look at it at MarketSmith. So let's talk about the current outlook over 3 time frames, short term, next week or two, intermediate, as well as long term. And this is very similar to last weekend. So I think it's still a buzzsaw market short term, very difficult banana peel market, so to speak, with 2 big walls of worry. Got the hawkish Fed with high inflation. Powell and then Bullard spoke Friday. I assume we'll get more of them this coming week. Haven't seen the economic calendar yet. I don't think it updates till tonight, but very hawkish tones. Bank contagion is the second big wall of worry. We're still getting daily headlines on that and new names. It's sort of like what's the next shoe to drop in this shoe pile that we're building up. Intermediate term, I'm still sort of similar to the short term. Again, I don't want to predict, and I'm ready for a change, and I'm doing my weekend work, but you've got the two walls of worry plus a potential third one that's sort of cropping up, which is these international conflicts, U.S. versus Russia. I mentioned them attacking our drone, which was a week ago. And then China issues, if you follow that official China Twitter account, the unofficial official one, which I think is the only China Twitter account. I can't remember that guy's name off the top of my head. I'll put a link to it down at the bottom of the video, so you can see it, or in the comments on the video. Just getting more aggressive in tone, the Taiwan issues, and then you have, Putin and China having a tea party this week. So, or vodka party, whatever they have, I don't know. And then long term, at some point, it's going to be a party like it's 1999, which was prior to the dot-com bust, coincidentally. Super excited about that. Prince mode is going to be coming. We've had a bad, deep, and long bear market for sure. And so the expectation is we will have a strong bull market down the road. We just don't know when that will start, but we're pretty long into this bear market, and so past historical averages. So we would be looking for hopefully it to end, being us closer to the end than the beginning at this point in time. Just can't predict when. So what is our action plan? Number one, immediate. For me, not doing anything at scale on the long side, maybe not trading at all, or maybe some waiting in. And then if somebody is fortunate enough to own one or more of these three, then you're monitoring for sell signals. And you're watching for add-on legitimate buy points, not chasing, not rushing in without some setup within your rules, but looking to add exposure. And so when the M has sort of slammed us to after school detention hall, then we need to make it a study hall. I pointed this out before that during the 2000 to 2003 bear market, the financial crisis bear market, the portfolio managers for O'Neill were doing massive research projects. They weren't sitting around twiddling their thumbs. They were researching, figuring out what works, what doesn't work, doing studies, doing courses, staying on top of things. So things to do as an individual investor: you can join an IBD meetup group, go to monthly, or some of them have bi-weekly meetings. It can be my meetup group. Alex Marinko has one. Roy Maddox in Charlotte has one. John in Boston has one. Very good, all three of those. So you can look at them, you can attend mine, make your own decision. It's a great time to read or read books. Bill O'Neill's How to Make Money in Stocks. Most Canslim investors read that at least once every 1 or 2 years. Livermore, Reminiscences of a Stock Operator book. Darvis, How I Made $2 Million in the Stock Market. The Perfect Speculator is one people have not read. Smaller books, not that hard to read, but I highly recommend that one. Or The Life Cycle Trade, learning about growth stocks and IPOs in particular. You can go deeper. You can take a class. Trader Lion just wrapped up the IPO class. I thought it was stellar, so I recommend that. Boston Group just did one on buyable gap ups. I've not seen that one, so I can't comment, but John's research is always impeccable and detailed. Matt Caruso has a course, and there's other ones out there. And then you also can sign up for a service that meets regularly online. This is like ongoing college education, continuing education. Matt Caruso is the one I choose to attend. Jim Ropel has one. I forgot the name of Jim's, but you can Google it. Mark Minervini. And then some of the other U.S. investing champions or top performers have services. Trader Lion has one. Very educational oriented. And Russ Haber, of course, is there, former O'Neill portfolio manager. So it's just baby steps. It's always working, always trying to make progress forward. From one of my favorite movies. And then you always, always, always do the weekend work and routine, even if the short-term plan that you've settled on is not trading until you get a follow-through day or whatever you might have picked, or get new highs outnumbering new lows on the indexes. It's just patience and discipline until we have improvement in the M and good setups. And it's interesting now. We actually this weekend, particularly within the IBD 50, I was like, wow, there's a bunch of stocks set up, and there's ones in there that have made progress and are extended. Also, it's just we're missing the M. Usually, it's the M struggling, and we're lacking setups too. So and then the M will improve, and then the setups start showing up, or are in progress. But this weekend, I was pleasantly surprised that at least we were seeing the setups in place. So let's jump back to MarketSmith and just look at a couple things. So here's just a list of leaders. These are, the ones I'm watching to see how the market's doing. Let's go to the weekly charts. So Allegro, very strong. You can see the volume coming in. You can see this massive week here. That was the earnings week, if I remember correctly. Yep, it's earnings week. Um, Strong above the 20 to 25% profit goal, and just moving. It had a pullback right there to the 10-week line. So if somebody was in it, perfect opportunity to add. You almost would have had to have your order in as quick as it hit that. Let's look at it on a daily. Yep. Oh, see, it didn't even pull back to the 50. And that's why I like pullbacks to the 10 weeks later, because that'll happen. You'll see stocks. How low did it get? That might be covering it up. No, low was 41.30. Yeah, and so the 50-day was well under the 40. But no, to hit the 10-week. So had a chance to add if you were in that and were paying attention. So ANET, very strong. Look at these weeks up in a row. Gee whiz. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 out of 11 weeks in a row. And look at the volume on that down week. Look at that red bar. It's like, what? Nobody is interested in selling that stock. They're like, no, we are hanging on. And you just see the high volume coming in. Just a great looking chart, one of the leaders. ACLS, another one. Again, look at all the weeks up in a row. Look at the volume coming in. Look at the RS line on all of those. A hair test is set up, is breaking out. This one is leading, beautiful RS line, but this is the one that does have customer concentration risk, which I mentioned previously, and Matt Caruso was one that really tuned into that and brought that to my attention. ONON, of course, this was just a beautiful gap on earnings. If you bought it before market, you actually could have bought within that blue zone. Look at the volume. This is highest volume ever. It's like double, almost double, I think, the IPO day. Just absolutely incredible. That is so rare to see. And then massive volumes the next 2 days. This is what it looks like when the institutions can't get enough. You got to see change of sentiment. Look at that RS line screaming up. Weekly chart, highest weekly volume ever, just slammed it, just piling into this thing. What a great setup. So here was your IPO advance phase. This is right out of the life cycle trade book. Here's your first base during the institutional due diligence phase. Here is a 54% prior uptrend when you measure that right there. So it has overhead supply, but the IPO base and the due diligence phase is the one place I can live with that. As I mentioned, I know in both our last monthly meetings, we talked about the overhead supply issue. And so we'll see what happens with this one. But, they are just slamming into it. Look at that. Triple digit earnings again, massive sales growth. The conference call was very strong. They're ramping up their tennis efforts with Roger Federer line, and of course the running shoe line, as well as casual athleisure wear use, are very strong. Here's LSCC, made it to the 20% profit goal. Again, you can see lots of weeks up in a row, 2 red weeks in there, both of them, well below average on one and well below a nice strong week after. NVIDIA, we looked at, again, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of 12 weeks in a row, and less than average volume on that pullback week. And I put SMCI in there. Looks like a great triple digit earnings. We'll see how it does. Notice all these are liquids. Look at the average daily volume. The lowest one is 60 million, 85 million, and all the rest are above 100 million. And of course, Nvidia's $14 billion per day. That's liquid. So those are doing well. And then let's look at our bank failure list just real quickly. I'm just going to page through these fast. You can see these fell off the cliff. SI, SBNY, we've already talked about. FRC, just, man, well, what was it, $230 to $12. Western Alliance, plunged, trying to bounce back. Canslim growth stock investors wouldn't be touching any of these. Nothing to do. I'm just looking at them, and because of all the uncertainty it's created, would like to see these stabilize and stop going down, because then we would know that the market is starting to price it in. Truist Financial, Comerica, LPLA. This one isn't hurt as hard. That's not a bank, but it's financial related. The ETFs, KRE, KBE, regional banks, just gotten slammed 50 down to 35. Those are big hits. East West, Schwab, I put in there. They're not a bank, but they're getting hit along with the financials. Veritex, Fifth Third, that's another one of the ETFs. There's Credit Suisse, just went to 86 cents, but it's had trouble for a long time. NYCB, see that one bounce back for some reason. USB, just flip through these. So what are there? And I put two of the big ones here at the end just to keep an eye on. Morgan Stanley, hasn't got it hit as hard. It's only off 20%. And Bank of America, see it getting hit also with big volume coming in even to the big caps. So I just want to keep an eye on that. Reminders, EPS season starts over April Fool's Day. Of course, it doesn't heat up till about 10 days in, around April 10th, 9th, something like that. Have to be prepared. Could be another Allegro or on-cloud running earnings reaction. So we'll be on our toes, and you have to do the work. And I kind of have talked about the weekend routine with regard to upcoming earnings. So monthly meetings, educational meeting next is Wednesday, April 12th. You register at the Stockyard Meetup site. Meetings are $12. You can attend live if you want to. You don't have to, but everybody gets the recording, slide deck, links to any webinars, articles that come up during the meeting. And then first timers, I send you a courtesy copy of the prior month's meeting. So that's current. Actually, it was 2 Thursdays ago, or a week ago Thursday. So this was the agenda we covered last month. This month will be similar. And I know that the Teaching Nuggets segment will be jam-packed in April because Ropel has been on IBD Live and Charles Harris has been on IBD Live. And those were just jam-packed with great teaching nuggets and reminders. So I'll be pulling heavily from both of those, I know, for the April meeting because I got a lot out of both of them. We'll continue to look at the short position on Fryer battery. Of course, it's extended to the downside now, not actionable, but we've been tracking that for a couple months. And then I'll cover through some educational topics, which will to be determined. So as far as studying, again, if you don't have a set of written sell rules, I spent 3 whole meetings teaching that. You can order those. Our meetings are $15 each. If you don't have a set of written sell rules, it's a great time to be working on them before we start a new bull market. As well as if you're weak on the weekend routine, I spent 2 months meetings teaching on that, how to use the newspaper and the Growth 250. Although if you just get the newspaper, you can, a lot of what is in there is applicable because the 2 lists will overlap. That comes up with my first pass watch list. So contact information, if you're interested in ordering prior meetings, just shoot me an email. You can join the website, Greenville Eastside IBD Meetup and the Stockyard Meetup site. No fee to join either one of those. All the resources are on the Greenville Eastside site, including the coloring book and the group teaching portfolio. You can follow me on Twitter and then videos on my YouTube page. you get my weekend updates, teaching on the group teaching portfolios in there. Our full meeting from May 21's in there if you want to look at a sample meeting. And then there's one on the 8-week hold rule, which is really the 8-week hold presentation. So a lot of educational opportunities out there. Hope you guys have a great weekend routine. And that's it. I'm out of here.